Welcome to another episode of the Wealth Nation podcast. I'm Yolanda, I'm a wealth advisor, and it is my goal on this platform to give you easy, actionable tips, content, and strategies that you can use to manage money well, to live abundantly, and to build generational wealth. If it's the first time that you're listening to the Wealth Nation podcast, please subscribe wherever you're listening to this platform. And if you're a long-time listener, I would love for you to leave me a review. Whether it's on Spotify, on iTunes, or if you're listening to us on YouTube, but leave a comment below. What are your thoughts about the Wealth Nation podcast? Is there anything specific you would like us to cover? Anybody you'd like us to talk to? Let us know in the comments. So in today's episode, we're talking about the rules for investing during a recession. Now, we're in a period of very high inflation, and we find that the South African Reserve Bank, they are busy raising interest rates in an attempt to curb spending, and by curbing spending, attempting to curb inflation. And usually what happens is after this period, maybe after 6 months or so, it goes into a period of recession because those hikes are happening so frequently, right? We can go into a period of recession. We see the stronger economies in the world bracing themselves for that already. You'll find that the central banks in those countries they're saying, no, it's nothing to worry about. But last year, this time, they were saying, no, inflation is nothing that we should be considering at this time. And look at us now. Fuel prices are through the roof. Food prices are through the roof. Prices of everything are increasing. People are demanding more money. That's driving up inflation as well. And it's just been one storm to the next. And the next coming storm is going to be recession. So I'd like to prepare you early for it. And we want to talk about some of the rules about investing during a recession. The first thing that you need to do, all right, and hopefully it's something that you're practicing right now as well, is not to panic. You need to avoid any knee-jerk reactions such as selling investments when the markets are very volatile. Okay, you could end up with some heavy losses by selling out your investments earlier than anticipated. Remember, when we invest, we want to invest for the long term. All right, these small hiccups. I know it's like you're in the middle of the valley right now, but we're going to overcome this. As an individual, as a community, as a country, we will overcome this. And so I want you to stay firm, not panic sell any of your investments and do anything rash during this time. What you could do, though, is to diversify and spread the risk. All right, so it's a great time to be reviewing your portfolio. And if you don't have an advisor, if you want an advisor to review your stuff, please visit my website, the brokerage website. It's solomonwealth.co.za. Click on the Get Started button, and then we can be chatting one-on-one. I could possibly review your portfolio for you and give you some feedback, give you ways and ideas going forward on how you can minimize the risk and still make some money in a very crazy time. The key to weathering this whole recession thing out is diversification as part of your investment strategy. You should be holding a mix of cash, of fixed interest, and equities and bonds as well. And also look at spreading your risk across global markets. Unfortunately, South Africa doesn't seem to be going anywhere. This energy thing is literally a pain in the ass, okay? And government has no answers for us at this point, or nothing that can settle things in the immediate future. And by immediate, I mean in the next 5 years. They're talking about timelines that are so unrealistic. We are feeling the pain now, and they can provide us zero relief. So reviewing your portfolio, something that I can help you with is by going through your risk profile again. Okay, are you still an aggressive investor? Are you still a moderate investor? Matching up your portfolio with your relevant risk profile. The next thing that you should be doing during a recession is to keep costs low. Now, all investment platforms charge you a fee. You can't invest for free unless you're investing with your banks, but those are below inflationary returns you're getting there. So rather pay your fee, get a choice of investments, different type of wrappers on those tax investments, greater variety as to what you can invest in. And to have that kind of variety, there's going to be a fee. Fees vary in South Africa. It can be super low. can be super high as well. So it's important to review your initial documentation of the investments that you're going to go through, your advice documents, and to see what your fees are like. Okay, there's platform fees, there's management fees. In some portfolios, there's performance fees. I also have to get paid if I'm advising you, so it's my advisor fee as well. You can make investments without an advisor. Obviously, if you're willing to do the work on that, you can do that as well. A nice strategy to deploy during times of recession is the Rand cost averaging strategy. But here it's like drip investing, right? You slowly drop money into your various investments, and this can be in the form of monthly payments instead of an annual lump sum or something like that. One of the benefits of the Rand cost averaging method is that you're entering the market at different levels. Instead of trying to time the market where you want to buy and sell at the right moment in anticipation of prices going up or prices going down, you Rand cost average it, all right? And you wait for that medium to long-term return, and then you sell at a profit. The next thing you got to do is you got to really be careful with the type of investments that you're in. A lot of times you guys want to invest on your own, but you're looking at shares, you're looking at unit trusts and ETFs. The thing that you don't consider is the investment wrappers, the fees involved, the rules involved, the tax implications involved. And that's where an advisor can come in handy and give you that advice that you need into choosing these kind of wrappers and how it works and how it fits into your overall financial plan in terms of providing for your kids, providing for your spouse, upon death, upon marriage. This is the kind of things that we do. So we will provide you guidance into choosing the right kind of investments, what your options are with the various kind of tax wrappers, how you can reduce your tax liability on the returns and the profits that you make with your investments. Recessions are also a great time to take advantage of cheap investments. Okay, right now, in a time of high inflation, the market is on sale because everything is super, super low, and you should be taking advantage of this. And I know when you risk averse, you're afraid to enter the markets or wet your feet when there's so much volatility around. But remember, in times of crisis, somebody's making money. A lot of the times, it's the rich. And then after they make the money, we want to complain that, the rich are getting richer. The rich are getting richer because they're taking risk. Yes, it's nice, and it's true to some extent that it takes money to make money. But it's more the risk. Are you willing to take that risk? And unfortunately, not everybody's in that position. But take a small amount of risk. You don't have to risk 100%. Play with 5 to 10% of your portfolio to take on a little bit more risk. Work with your advisor to find those undervalued investments that are currently available. Another thing that you got to do when you're investing during a recession is you got to be patient. Timing is so important. You got to be patient. You got to be able to wait it out. You will get those returns. You will get those interest returns. You will get those dividends. Just be patient. And also, if you're really risk averse, you can look for those safety nets. I mean, there's tons of investments available, literally hundreds of unit trusts, of ETFs, conservative ones that you can invest in during this time. Not take on too much risk. It's a great safety net. Things like government bonds, money markets, and not accounts, money market funds can give you some pretty decent returns as well. Commodities is a great safety net. I'm a big fan of commodities, and if you're a wealth insider, we do a lot of content based around gold, based around silver, being a real good store of value during times like this. And I know when you sit with me and we're talking about financial advice, I always tell you that past performance is never indicative of future performance. But I was presenting to my clients and to wealth insiders recently. We did a market update and trying to explain exactly what's going on because a lot of my clients are in offshore investments, trying to explain what's happening in the US as well. And we did some research and we found that there have been about 10 recessions, or not even going that far to call it a recession, 10 economic crises. Is that the plural of crisis? I don't know. But there's been about 10 since the 1970s or so. And every time there were those sharp dips in the market, they always bounce back to higher than the level that dip started at. All right, so we can take solace in the fact that history is on our side on this one. All right, don't panic. Just try and be safe, but also see those opportunities, because Remember, in every crisis, somebody is making money, and I want that person to be making money, to be you and I. At this point, we just need to think a little bit differently, strategize a little bit better, and not do what everybody else is doing. Okay, unfortunately, the broad mindset of people is going to be getting into high consumer debt, buying cars. Cars are so out of the question right now. If you're thinking of buying a car, so, with the pandemic, what happened was all of the various electronics, the supply chain, especially coming out of China, because they had some hard lockdowns, affected the world's entire supply. And if you read about it and you follow the news and the economic and the tech news, you'll find the crisis is around semiconductors, and majority of that come out of China and Taiwan specifically. And you'll see that the U.S. wants to bring that manufacturing back onto, or bring it onto U.S. soil once again, so they're not dependent on China. So those semiconductors are a big part of the modern car making process. Also things like computers and cell phones. If you are a Mac junkie like me, you'll know that there's a backlog for Apple products. Okay, so those semiconductors are driving up the costs of new vehicles. There's a shortage of new vehicles coming around, and that in turn is putting pressure on the used vehicle market. So prices of used vehicles are being inflated, not because there's value in those cars, it's because supply, or the demand and too much of it, has increased dramatically, and that pushes up prices. So if you're in desperate need of a car right now, I would look at a long-term lease instead of committing at these ridiculously high prices. I know whatever I say on this podcast or in any public platform and social media that you find me on, I'm giving you education, I'm giving you tips, I'm giving you strategies. It's never financial advice. Financial advice is when I sit with you one-on-one. I take into consideration your goals, your values, your priorities. All right. And from there, I will give you financial advice based on your specific circumstance. So if you want that, go to my website. It's www.solomonwealth.co.za. Click on the Get Started button and book an appointment, a complimentary appointment. And if you're looking for tons more resources like this, visit our Financially Fabulous Females website. That's our education website. Tons of resources, downloadable tools, videos and blogs that you can access and learn a little bit more about personal finance from a South African perspective. All right, so that's it for me on this episode of the Wealth Nation podcast. We'll chat next week.